Let's take a look at some information and charts on Bitcoin for a brave new coin. So if I was in a coma and I woke up suddenly in a cold sweat, I would first check the Bitcoin block time, which is a massive barometer for not only hash rate and difficulty, but also price at the end of the day. Usually we see a lot of volatility in price with volatility in block time. So to see block time slightly below 10 minutes here, which is the targeted block time for BTC, tells me that hash rate is increasing quicker than difficulty or in between difficulty adjustments in order to keep block times below 10 minutes. It tells me that price volatility probably isn't there so much because nothing's super volatile in block times. And it also tells me inflation is slightly higher than 2 minutes or 2 minutes, 2% per year annually, or around about there. If block time is quicker than the 10-minute retargeting, it means in the near term, inflation is slightly higher than it should be, but it also means we eventually run out of that block reward subsidy quicker, and we get to the halving quicker and quicker, basically. That's how that works. And hash rate difficulty has, in fact, continued to increase slowly. At this point, we've almost retraced the entire China drop. April was a massive global shift, April-May. Global shift in hash rate away from China into anywhere else on the planet, including Texas, Kazakhstan, Iran, Venezuela, North Dakota, any place with cheap electricity. The economics of mining is such that you want the most abundant and cheapest electricity you can get most of the time that is not just burning coal or burning oil, at least in the developed world. Most of the time that is renewables, hydro, wind, solar, that sort of stuff. So most of the undeployed Chinese mining hardware potentially is getting redeployed currently. That's by the looks of it anyway. And if we look at the difficulty adjustments as a percentage since that string of drops here, the biggest ever in BTC's history, it's only been positive. So we've only had difficulty increases every difficulty adjustment. And we're slated for a slight increase again in about 12 days. If we look at all the mining ASICs available, that's SHA-256 at 4 cents per kilowatt hour. Currently, almost everything is in somewhat of a profit at 4 cents per kilowatt hour. The newer miners especially are all more than in profit. They are fine. At this price point for BTC, at this difficulty level for the network, they're all still making plenty of money per day. No problem there. So it's very likely that we continue to see hash rate get deployed so long as there's chips and ASICs and the supply chain is working, that sort of thing. So we probably continue to see increases in hash rate. We can also look at miner outflows as we get more into the supply demand side of things for Bitcoin itself. And it looks like since March 2021, miners really haven't sold anything. They've sold their baseline amount. There hasn't been an increase, hasn't been a decrease. Miners haven't really done anything. It's kind of scary because that means they're potentially holding onto a ton of coin up here. And if we do turn south price-wise, this is price here in the line graph. If we do turn south price-wise and the miners get nervous, then they could potentially push this down farther. Now, what the solo miner did here was the correct thing in that he sold into strength at that time. At least I assume it was a solar miner or a conglomerate miner who was just sitting on tons and tons of coin. So expect this graph to sort of repeat this pattern where there's just a massive sale in coins eventually that will have some impact on price. Ideally, it's not as we're going down. We saw a little bit of that in May, June, but ever since then, it's really been pretty much flat. And we can find this and look at this because everything's tracked on chain. And if you trust the data from CryptoQuant, which I do, then you can say, okay, these coins haven't moved since they've been mined. And when they do move, then we add it to this graph. Something else we can look at on the supply demand side of things for the coin itself is exchange reserves currently at multi-month lows. Something else you don't want to see. You don't want to see this uptick if price drops. If price drops and this upticks, likely you'll see an increase in the velocity of the price drop. Certainly not always the case. And we may even see deposits into exchanges before the price drop. This stuff I trust a little bit less than the mining supply flow. This stuff I think is a little harder to track because exchanges are always changing wallets and you got to really be on top of this sort of thing. But assuming this is all correct, this looks completely fine and normal. And if anything says the fact that we're going higher makes sense, there's less available on exchanges, less for sale. And if demand is the same or increasing, we should see an increase in price. Something else big that happened in the past month for BTC, aside from the ETFs, was the Taproot activation. This is an article I wrote in 2020 talking about Taproot, and I'm the self-ascribed Hemingway of analysis. In a single sentence, I told you what Taproot and Graftroot were: smaller transactions, more privacy, fungibility, and larger smart contracts. So you're going to start to see more smart contract stuff. You're going to start to see, potentially this means smaller blocks because, like I mentioned in the opener, if the block reward subsidy is gone and we don't have security for the chain, will miners still stay if there's no subsidy? So we may see calls for smaller blocks if everything is cheaper, transactions are cheaper, fees aren't high enough to compensate for the subsidy. We'll see. That's a long ways down the road, but it's always worth thinking about. More privacy and fungibility. Is it going to be more private than Monero? Probably not. I haven't seen like the hard data on that, but my guess is anything that's optional allows for chain analysis companies to figure it out. So unless the pool of Taproot or whatever, I don't know exactly how it works on the base level, but as long as the pool is small enough, they can easily just figure it out as far as what's going on here. And larger smart contracts, we may start to see more complex things on Bitcoin, probably not to ETH's level of complexity, but probably similar. Here's another article from BNC from 2020, going a little bit more in depth into Taproot, proposed in 2018. It was called MAST. I didn't realize this, but Schnorr signatures, which come along with Taproot, were under patent in 2010 or 2009 when Satoshi created Bitcoin. That's probably why they're not currently, or they weren't in Bitcoin from the very, very beginning. But you can always go through and find all sorts of more fun stuff about Taproot. I'm sure we'll be hearing more and more about that in the coming days. You'll be seeing more and more stuff from the hardware wallet people about Taproot, undoubtedly, when it's fully implemented across the board. Whether or not we see that on exchanges, not so sure just yet, but definitely on hardware wallets. If you look at transaction counts and average transaction values since 2016, we've basically been ranging on the network since 2016 as far as what the network can handle, what's going on with price. I mean, there's a lot of stuff that's happened since 2016. Transaction counts are still around 150,000 per day. For most people, this is the difference for me personally between ETH and BTC. For BTC, for me, it's mainly a buy and hold. For ETH, you do stuff with it on chain. That becomes less and less of the case when ETH fees are as high as they are. But I'm not using Bitcoin nonstop constantly to do stuff. Its job is to be ultrasound money for me. Now, as Taproot gets activated and deployed and implemented, you may see an uptick in transaction counts. The network is technically much different than it ever was because Taproot is available. Whether or not people use it or it gets implemented, we'll see. But on the exchange side of things, really mainly is how you'd see this on this graph. But something worth considering if we quadruple transactions on chain, for example, in the next year, it's not because there's all this sudden activity, it's because the network's fundamentally different. Average transaction values have been rising along with price, so nothing too crazy to comment on there. If we look at NVT, inverse metric of economic utility relative to price, since 2012, NVT has slowly crept up. We've gotten a series of higher lows. You want NVT to be declining. NVT is now declining, but it had been rising. So we're seeing finally an increase in on-chain activity relative to market cap. Active addresses, though, extremely healthy here, along with Bitcoin difficulty back very close to 1 million per day. To me, for BTC, I like to look at active addresses, and for ETH, I like to look at transactions per day. So active addresses rising, NVT falling, bullish, transaction counts rising, bullish, and MVRV relative to price. MVRV is similar to NVT. It's a measure of market cap versus realized cap, which is on-chain activity again. And historically, since 2011, every single high in price has been marked as a high in MVRV, a relative high or an all-time high in MVRV as well. Even the most recent all-time high in April had an extremely high MVRV relative to where the rally started. Something else to notice, since 2011, MVRV has been declining. So are we going to break out of that trend, that declining trend, on this move up is one question I'm asking. The other question I'm asking is, where do we go from here? We're currently at 2.1 on MVRV. Most coins top out at a 2x multiple if they are non-DeFi coins on MVRV. So we're already there for BTC. So in 6 months from now, when I'm looking back at this, I'm saying, of course that was the top. MVRV was 2. On the flip side, we could also be seeing MVRV go much higher, say to 3 plus towards the end of the year before the ultimate cycle top is in. Now we've seen double spikes in MVRV multiple times, so it wouldn't be out of the ordinary. But that's just something else to watch for, is what does MVRV look like as this goes higher, if it goes higher. Something else I like to watch is hodl waves. We can look at every coin that's ever been minted and when it's moved and when the last time it moved was. And we can plot that kind of like a soil core. We can see the age of everything. We can see the granite. We can see the Mesozoic period, whatever. All that is sort of here. We can see what's been going on. So the spikes or the increases here represent rises in activity for that relative time period. And much like MVRV, any rise in these time periods from 6 months or less has marked a top in price. So I've turned off everything except coins that have moved in the past 6 months. And in 2018, we reached around 57%. 2013, 2014, it was around 60%. Most recently, we got to around 40%. So that's fallen way off and is just now starting to increase again. So if I'm reading this in a vacuum, this tells me we have a ways to run, assuming the past repeats again, in that we see all-time highs relative to this rise in coins that have moved over the past 6 months. Let's talk about Lightning real quick. Lightning Network capacity continues to slowly increase here. Not something that's going to move the needle for price in general, I don't think, but people do look at this and watch this and see, are people actually using Bitcoin? Something else that is worth noting is the more people that use the Lightning Network, the more transaction counts and on-chain data become less useful because you can't really see, at least to my knowledge, you can't see the information here. I can't see the transactions. I don't know how to count those transactions or the size of those transactions, that sort of thing. So it's just a different system versus directly on-chain. Bitcoin Google Trends worldwide past 5 years is up from basically the all-time lows of 2018 to 2020. Has a nice base here at 25, whatever this is, percent or whatever. But it's also not really going anywhere anytime soon. I mean, what you want to see here is slow rises in Google Trends like you did in 2017. We saw that in end of 2020, early 2021. You want to see this start to tick up as price starts to tick up as more and more people get more and more involved in searching for Bitcoin in some way, shape, or form. There's more media around it. There's more articles. There's more content in searching for Bitcoin-related stuff, and that often goes hand in hand with Bitcoin price. Moving on to technicals, this is the Pi cycle top indicator. So it's basically 2 random backtested MAs that have historically been very close to picking the cycle tops within 5 to 10 days. You can see here the one in 2011 didn't necessarily form yet or work out, but every one of these past that, anytime we've gotten across, it's usually been pretty dead on the money. We didn't get across on this local high in 2019, but this is always one of the first things I look for if I'm on my checklist of stuff. Now in March or May or whenever this was, this cross, I said ignore it. It was the only thing in the entire ecosystem of things I look at that was telling you that was the top, this is bearish, time to close some positions. So Bicycle Top called that early, and then Wyckoff called that after that, and then called stuff about the same time as far as the edge-to-edge move. But this is one of those early ones that you can watch just as a barometer, and you can see we're pretty far away from that. Currently, we're far away from the cross. We're far away from being above this green MA. I forget what it is, but we're a bit of a ways away from that. I also like to look at the 2-year MA multiplier. The green is the 2-year MA. The red is 5 times that. In nearly every high and low, this thing has caught those areas relatively perfectly, in that it tells you where to buy, it tells you where to sell, it tells you where we're overbought, it tells you where we are oversold. Most recently, we didn't actually exceed the multiplier, and on the top or the bottom. Currently, we're closest to the midline. 140 is the top, so anything above 140 says be careful. Now, that doesn't mean we can't go above 140 for weeks, but also doesn't mean we're going to go above 140 for weeks. So keep that in mind. Also, 28K is the bottom here. So this is telling you anything below 28K is a massive, massive buying opportunity historically. So that doesn't really help you here either as far as trend metrics go. Here's the multi-year pitchfork on BTC, all the way from 2019, dating back. Pick 3 points, you get a rate of change. This also gives you a buy zone and a sell zone. And we've held this rate of change quite nicely since then. We've sort of filled in this pitchfork, hugged the midline a little bit here. Currently, the midline support is around 54K. Top side is between 120 and 160. So again, this doesn't really help you. This doesn't tell me any new information other than we are on track for where we need to be or where I expect us to be. If we break below 53, 54, then the mega macro bull trend is in trouble. The pitchfork is still fine. The pitchfork is fine all the way down to 28 or whatever this low is. You know, we could go all the way down here and still be fine for this current rate of change. It's multi-year, it's slow. I love it. As long as we're in here, I feel safe. You know, we're on the road, we're driving. We don't want to get on the shoulder. We don't want to get in the field, in the median, in the berm or whatever they call it. We don't want to get anywhere in there. Just stay the course. We're fine. And if we're above this midline, this median line, that tells me we're more bullish than bearish. So 140 by end of year, still not out of the cards. Still on the table. Bitcoin on the cloud looks a bit tired, has a TKC clamp here. I talked about this in the Monday, Setup Monday video, but this is also pointing to a 54K dip buying level should we retrace there. This doesn't say close your longs. It doesn't say open a short. To me, it just says don't open a long because be careful. It says get ready to get stopped out if you're long, if you have tight stops. And this also tells you should be setting bids somewhere lower in preparation for potential pullback. On the 5200, on the daily RSI, on the bottom here, volume, VPVR, and yearly pivots. Yearly pivots give you resistance at around 80K and 100K, or 99K, whatever that is. They give you support at around 45K. The 200-day moving average support is around 48. VPVR support at around 48. Another VPVR support at 55. So there are some levels on the way down. You know, this thing isn't just going to get crushed to sub 40. There's plenty of rungs on this ladder should we fail at this pivot again. But if we hold, I do like the next pivot up, which is 80K or 82, whatever that is. We just need volume. We've just had no volume kind of anywhere at these highs. There's just not many people excited to buy up here just yet. And something else to watch is the Alligator Fractal on the technical side of things. The Alligator is three MAs, the 5, 8, and the 13. If they're green, red, blue, they're bullish. If they're blue, red, green, they're bearish. So we're currently bullish on these. And similar to the cloud, when you get a cross, you want to be long, or cross below, you want to be short. So we're above all the MAs, it's crossed bullish, we're above the midline even. And then the fractals give you entries and exits. Anything high, low, high prints a bear fractal. Anything low, high, low prints a bull fractal. And this is printing an entry at around 69 and 68K, whatever that is. And it's printing a stop loss at 62. Again, I don't know the exact level here, just look at it on the chart. But this can be noisy and has been noisy up here because technically you got stopped out at this level. So how this works is a breach below on a candle close on the daily would be a stop loss. So it's telling you 62K is a good level to get stopped out. And then the cloud is telling you that 54 is a good place to buy. The pitchfork is telling you 54 is a good place to buy. The 200-day moving average is telling you 48.5 is a good place to buy. So in general, I think everything looks completely fine. Just not a whole lot going on price side of things. And I would certainly expect some volatility over the next 2 weeks leading into December. Lastly, let me just mention the ETH-BTC fund and DeFi portfolio. I trade for Techme Capital and Enzyme Finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM performance, allocation, some of the vaults I'm usually in on Yearn, Comp, and Aave, as well as the trades in the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.